It's about that time of day again here, folks. Welcome back. Welcome back. You know what time of day it is. 8 p.m. Eastern Time, Monday through Thursday. We deliver our nightly newsletter. Welcome back, boys and girls. Hope you guys had a fantastic Tuesday. We had, last night's newsletter, we called 3 different trades: Crude, Gold, Russell. All 3 of those trades were big, profitable trades. We'll talk about that in a moment. We'll take a brief look here this evening at the markets today. We've got news coming out of Russia, Crimea. We've got Europe speeding up, U.S. stuck in neutral, Asia slowing down. We'll take a look at briefly here how the markets fared today. And we'll also, of course, look at what happened today in the news. We had some very surprising numbers here that came out in today's U.S. session. We'll take a brief look at this day in history. Got some great stuff to talk about today, and we'll get ready for a Wednesday in our live trade room tomorrow. We'll talk about the news we have for tomorrow. We'll go into our trading opportunities tomorrow, looking at crude oil, looking at gold, and looking at Russell. I've got charts posted here below the video here this evening. So what I'd recommend you do is download these charts. You can click on them right here, open them up, and then have them ready here. And again, if you're not watching this on our blog right now, make sure that you join our newsletter by going over to SchoolOfTrade.com or SidewaysMarkets.com. Head over to SidewaysMarkets.com and make sure you join our newsletter list. And as you can see here, we have a wealth of information on this blog. Don't forget, join the free trial. You can sign up for a free pass to attend our trade room right there over at Sideways Markets. So don't forget to register. If you can imagine it, you can achieve it. If you can dream it, you can become it. Love that quote. Let's talk about what happened today. First of all, if you rewind the tape, don't take my word for it. Go back and watch the newsletter from last night. Last night, 3 markets, 3 profitable trades, and some great trading opportunities. First of all, last night, we talked about buying lows and selling highs on crude. Had a fantastic session here, buying lows, selling highs. I'm going to show you that chart in just a few moments. On gold this morning, gave you a specific selling at 13.18.8. Profit target we're waiting on right now at 13.01. You can grab a look at that chart a little bit below this video. And of course, on the Russell, got our profit target filled on the Russell, 87.4 for the short, target at 65.9. Yeah, don't adjust your set, guys. That's over $2,000 per contract on the Russell. So very profitable trades that we discussed on this newsletter less than 24 hours ago. Make sure you register for our newsletter because it's got some valuable information. Let's keep going. I'm going to take a look at those trades that we took in just a few moments. And then looking at the markets today, crude oil really has a weird personality right now, and for good reason. Very odd, right? We got, well, I guess maybe not that odd. When you understand what's going on out there, it's not that odd. But remember, we've got the issue in Crimea, right? So Russia, Ukraine, Crimea, the concerns over supply of crude oil futures or of crude oil, the commodity keeps the prices propped up going higher. But meanwhile, we had a very poor reading out of China on Monday. On Monday morning in the U.S., we had even more lackluster manufacturing news in the U.S., and so we've got crude dropping lower or being pushed lower based on concerns over manufacturing. So Russia pushes it higher. Manufacturing in Asia and in the U.S. keeps it from going higher. It's really been a roller coaster here on crude all week, but hey, I like roller coasters. So do you probably. Sounds good to me. As long as I wear my seatbelt and my helmet and I pay attention, I'll be just fine. We're basically sideways trading right now around this big round number of 100. And we're going to continue to be careful looking for those fake out breakouts, right? Looking for those phobos, those fake out breakouts. Basically, as price tries to escape this 100 even level, it keeps getting sucked back up or sucked back down to that 100. So while we're within 105 above and 95 below, we've got to keep in mind that 100 is going to be the magnet, right? So we're looking to buy the lows, sell the highs, fade the breakouts. 145 ticks of range today on the old crude oil futures. That's a pretty typical range today, not really anything out of the ordinary. We typically get about 120 to 150 ticks of range on crude. Now, get me over 200 ticks of range, now we're talking. Now, a typical range today does not give me very much clues for tomorrow. Closing print here, though, below that big round number of 100. But again, as long as I'm within 95 and 105, that 100 big round number, until we find some confidence to move higher or lower, we are expecting this roller coaster ride around 100 to continue on crude. Moving down here to gold now, we know that gold's also in a very odd personality, kind of an odd last week or two on gold. Of course, we've had this big run up on gold at the beginning of the year, but now the weather is starting to ease off here in the United States. We're starting to get some better news reports. We've already seen a rebound in manufacturing. We've already seen signs of a rebound in housing. So this gold that was pushed higher, really based on concerns over Mother Nature, which was resulting in bad news reports. Right now, you've got Asia slowing down, mainly China we're talking about. We just saw a very, very bullish bit of news out of Europe, and the U.S. is still kind of stuck in neutral right now. You know, we had this really great end of 2013, and then wham, Mother Nature's been having her way with us over the past 60 days, and that, of course, resulted in news reports. The news reports that we're getting right now are a month old, so we still haven't been able to get out of that bad weather yet. We know that the month of March, though, is likely to be that month. Again, like I said before, we've already seen a rebound in manufacturing, and I'm going to talk about the housing number we saw today. So we're seeing a little bit of that rebound in housing already, too. So U.S. should get back on track, but right now we're kind of fiddling with neutral right now, trying to get ourselves going in one direction here right now here in the U.S. Gold also in the short term trading in a sideways range. What you're going to see on gold tonight, though, is that gold's been pushing higher. We've had this key set of moving averages on gold, and now we have just recently now broken those key moving averages. So we're looking for shorts here on gold in the future, but right now, though, we're really trading in a pretty sideways narrow range, and we'll take a look at that in a moment. 120 ticks of range today on gold, relatively typical on gold for that range. Remember, a really wide range will oftentimes result in a narrow range the following day. So today, typical range on crude, typical range on gold, no real big clues out of that. We continue to see the closing print here below 1,400 and above 1,300. Again, you can see 22 basis points with 120 ticks of range. As you can see, we're going up, we're going down, we're going up, we're going down, and we're pretty much ending the day right where we began the session. Same thing in crude, right? 145 ticks, 0.18%, right? So crude today went down, up, all around that 100 big round number. So it's pretty much same story, different day here for crude and gold this evening. The mini Russell, though, now we're talking. Mini Russell gave us some great opportunities here. Basically, at the end of the year on the Russell, we had record-breaking numbers. We had pushed above 1,200. Then, all of a sudden, manufacturing news slows down. Again, blame it on Mother Nature, but doesn't matter who we're blaming it on. Those news reports led to some profit-taking, which was smart at the beginning of the year. And, of course, we've ticked below that 1,200 big round number. That's a big milestone. Today was another roller coaster ride. I mean, literally roller coasters on crude, gold, and Russell. Now, Russell had a reason, though. I want you to remember what I said last night. What did we talk about last night about the Russell? What was Monday all about? Monday, 308 ticks of range. And we talked about that wide range on Monday was probably going to result in a very narrow range right today. And although it wasn't tremendously narrow, it certainly was narrower than what we saw yesterday. So basically, we used the highs of the range, we used the lows of the range, and that became our guiding points here today on the Russell. Exactly what I told you guys last night on the newsletter. We got pretty much exactly what we expected. So another roller coaster ride, up, down, inside yesterday's range. 221 ticks of range. So another wide range day. I'll tell you, the volatility has been incredible over the past few months. If you're looking to pick a direction for a long-term trade, this is not the environment to be doing it. Right now, I have a hard time anticipating things more than an hour from now. So it's very, very active, very, very volatile, and plenty of volume. It's really a day trader's dream come true. Closing print today, again, 0.02. That's it? You would think we got 2 ticks of range. So again, what's happening is we're going up, we're going down, we're going up, we're going down, and then we're ending pretty much where we began that session. All right, so all the day traders are having fun out there pushing things around. As you can see though right now, crude stuck in the mud around 100. Gold trying to figure out where it wants to go right now, although gold did just break a key moving average support level. And then Russell, huge range, but it's still inside yesterday's range. So we don't have much of a clue there either, but we know that we're getting some very, very volatile markets right now. Let's keep going here, guys. Let's talk about the news that happened today. Had a pretty exciting day as far as news reports go. At 9 o'clock, we heard from the home price index, shows strong gain in home prices in January. No more bad weather to blame now. 10 a.m. this morning, we heard from new home sales. Now, keep in mind, all of these are hyperlinked, and you can go learn more about individual news reports. So make sure you guys click on these little hyperlinks here, and you can learn more about each individual report. Now, new home sales was a good number. It did miss the target by a few basis points, but within expectations. So we pretty much came out right within expectations on new home sales. Again, this is why I say we saw the manufacturing rebound earlier this week and last. Now we're wondering, is this the uptick we're looking for in the housing market? Remember, we had some great housing market potential at the end of last year, and then the weather just demolished all the new home sales, pending home sales, everything just got through the floor. And so now we're starting to see those bad weather reports start to take shape here going into the rest of the year. The big number though today, 10 a.m. consumer confidence shatters expectations. Huge rebound in consumer confidence. Biggest consumer confidence number since April 2008. That's right. This is the highest number we've seen since the whole debacle, right, with the whole credit crunch in 2008. So this is a big deal. What I thought was incredible was that if you read the report last night, if you read this morning, if you read the consumer confidence report, you'll see that the expectations for the future, basically what they do is they ask people, are you optimistic for the future? Are there more jobs in the future? And everyone that they're polling right now seems to be very optimistic for the future. At the same time, pretty much average for today's reality, I guess you would say. So are there jobs available right now? No. Do you expect jobs to be available in the future? Hell yeah. So that's what we're getting from consumers right now. Consumers are saying, no, it's not great right now, but they're optimistic for the future. I got to find a little bit of what they're drinking. What's in the water for these consumers? Because I want to be optimistic like that too. Hidden gem today. Here was a really interesting little gem of news today. Now, this news report is not that important under most conditions, except as you were reading through the reports this evening, the State Street Investor Confidence Index. Again, click on that little hyperlink right there. You can learn more about it. Remarkable, showing institutional investors. Now, institutional investors, these are major corporations. These are large pools of capital that are managed by an individual, a firm usually, such as the New York State Firemen's Pension Fund, right? Think about how much money is that in that pension fund for all the New York State firemen, right? Or whatever the case may be. These are institutional investors. And right now, they are buying up global equities at a very strong pace. We're talking European, Asian, and U.S. equities right now. So read that report. You'll be a little bit surprised to see that right now, every dip is being bought up here aggressively by institutional investors. Clearly, they know something that we might not. So that continues to throw some fuel on the fire for the U.S. equities going higher. I've been bullish U.S. equities since the end of last year. I've been very vocal with you guys, and this is telling you there's more of that to come. Now, heads up, every Wednesday we have inventories at 10:30 on crude. The night before that, Tuesday evening, yeah, right, I don't do the math, right? Tuesday, night before Wednesday. Tuesday evening at 4:30 p.m., we get the American Petroleum Institute inventory report. Very big deal. This is going to be pretty much a duplicate of what we see tomorrow. So this is going to be a big clue leading up to tomorrow's inventory report. 6.3 million barrels. That means we have higher supply. Higher supply usually means lower prices. This is the fifth straight build, and what that means is this is the fifth straight week on Tuesday evening that we've seen higher inventories, right, than we were expecting. This is the largest build since November of 2013, so we're getting a lot of inventories piling up right now on crude. Remember how we use this, though. This will be used in combination with tomorrow's 10:30 inventory report. So right now, this is worthless. But this is going to be a very important number tomorrow morning. At 10:30 tomorrow, if we see another higher inventory number, what do I always talk about? What's the most important thing regarding inventories tomorrow? You know this one. It's demand. Demand is the most important aspect tomorrow morning. Because if demand comes out lower, and you really can't get the demand number very easily. You're not going to get it from Forex Factory or Econo Day. There's very few free services out there that will give you that complete demand report. I pay for a service at tradethenews.com, and I'll get that tomorrow at 10:30. If the demand is lower, then that means the only reason why the inventories are piling up is because there's too much supply. Now, sometimes the inventory piles up and the demand is lower. In that sense, we have to wait patiently. But I'll be watching tomorrow because, think of it like a shoe store, right? You come into JJ's Shoe Emporium, whatever you want to call it, right? Shoes for left, buy one, get the other one free. I'm kidding, that was a bad joke, bad shoe joke. Well, if I own a shoe store, and my stock room is filled with shoes, if my inventory is filled with shoes, I'm either ordering too much supply from the manufacturer or I need to slash my prices and increase the demand. It's either too much supply or not enough demand right now on crude. We've seen poor, weak manufacturing data out of China and the U.S. It's probably the demand, but we're going to wait and see tomorrow. If the demand number comes out lower than expectations tomorrow morning at 10:30, it's most likely going to be a clue to get selling short. But hold that thought. We're going to talk about how to trade tomorrow's crude inventories in just a moment. This day in history, one of my favorite times of our newsletter, March 25th, 1809. Very cool. This is a really cool bit of this day in history. The Farmers Exchange Bank of Rhode Island, USA, became the first bank failure in the U.S. after issuing, now this sounds familiar, issuing $800,000 in loans against an asset worth only, $45. That sounds pretty familiar, doesn't it? Nothing's changed, right? We had the big housing debacle in 2009. So 200 years later, and bank loan officers are still loaning way too much on assets that ain't worth nothing, right? Pretty incredible. You would think they would have learned by then. But imagine how much $800,000 was in 1809. 100 years ago, $1 is $17 today. So just imagine how much money that is. That's like lending $10 million on a home that's only worth about $500,000. Right? Pretty big little whoops-a-daisy on the part of Farmers Exchange Bank. Follow that hyperlink. You got to see that hyperlink. That will take you right to some old currency they used back then. Pretty cool stuff. March 25th, 1966. Just a little skip forward here. This is pretty cool. Now, Bank of America, which of course is known very well now as a global corporation here in the U.S., it began in a small farm town in Northern California. Now, the chairman of Bank of America of California in 1966 introduced the Bank AmeriCard. This was backed by Visa, right? The big credit company that we've all come to love. And of course, this became the first soiree into national credit card debt. Amazing thing with this. They actually sent out credit cards. I think it was 60,000 people, not an application for a credit card, but actually the credit card. Could you imagine? Could you imagine today if Visa sent out 60,000 credit cards? Just here you go, give it a try. They'd be bankrupt, right? People would be going to the ATM left and right with it. They wouldn't care. So times have definitely changed a little bit. But this was the first little bit into credit cards. Now, at that time, people were using credit, but they would have credit with the farmer, they'd have credit with the banker, they'd have credit with the shoe store, they'd have credit from different vendors. This was the first time they wrapped together credit cards in one easy-to-bank location, right? Gotta love Visa. Thank you, Visa, for making it so easy to pay $500 a month on a $300 balance of the credit card. News tomorrow. So great history on March 25th. News for tomorrow. We got a big news day tomorrow. We got Red Star News at 8:30, and we got inventories at 10:30. Now, heads up, we've got GDP on Thursday morning. So tomorrow afternoon, be careful late in the day. I got 8:30 durable goods. I got 10:30. EIA, of course, is short for crude oil inventories, 10:30 tomorrow morning. The big deal here for tomorrow is that durable goods orders at 8:30. That's Red Star News. I love seeing Red Star News right out the gate tomorrow morning. So we're going to watch that opening bell on gold at 8:20 and then get ready for 8:30. This is important because durable goods is a manufacturing number. I can't wait to see how the rest of the week plays out with manufacturing because we've obviously been dealing with this over the past few weeks, starting with Chinese manufacturing hitting 5-month, 6-month low. So durable goods orders tomorrow at 8:30. It's a Red Star News. It's hot. This is going to be a big report tomorrow morning. And remember, we've seen some sideways ranges over the past week here on gold, on crude. Russell's been all over the map. This could set things straight tomorrow and get things on a straight path here, up or down. It's a Red Star News report, so don't forget, set that runner, Red Star News, set that runner, and let that baby run. Don't say I didn't warn you. All right, so we got big Red Star News for tomorrow. You can use the calendar here, and then of course we'll keep going lower. Now remember, when you're trading crude inventories tomorrow, 3 things you want to remember about crude inventories. First of all, tomorrow will most likely be a sloppy session ahead of that news. I always remind all of our students in the trade room every morning on Wednesday mornings, be patient, be careful. If you're starting to scratch your head tomorrow and going, man, what's up with this crude today? You know why. It's ahead of that inventory report tomorrow. The second thing you got to be aware of for tomorrow for crude traders, we will sit on hands 15 minutes before, starting at 10:15, and 15 minutes after until 10:45. Let this chaos settle down a little bit. It's going to be chaotic. It always is. And oftentimes, the initial reaction to that news is the opposite of what you want to be doing. So sit on those hands. If you're trading crude oil, of course, only applies to crude, 15 minutes before and 15 minutes afterwards. Third, forget what the news says. Now, I know. Didn't you just say it's going to come out important tomorrow? You're absolutely right, it is. And I can't wait to see what comes out because I'm just interested in this. But if you're a brand new trader right now, you don't need to wait. You don't need to try to interpret this news at all. Most news is noise. If you're a brand new trader, don't waste your time trying to understand the news. Just know when the news is going to be, forget what the news says, and focus on trading the reaction. As hard as we try to predict the reaction on a market like crude oil, by the time we get the prediction made, we've usually missed the trading opportunity. So focus, instead of predicting, focus on staying patient, finding a new trend, and then trade with that trend tomorrow morning after, what time again? after 10:45. Alrighty? So major news tomorrow starting at 8:30 with durable goods and then 10:30 on crude oil inventories. Let's talk about the trading opportunities for tomorrow. Now, I can't forget, this is the chart that I posted 24 hours ago. That's right. We reminded you last night on crude to buy lows, sell highs, buy lows, sell highs, buy lows, sell highs. Guys, if you took my my advice today, selling short at the highs, buying at the lows, I don't care whether you sold the highs and took profit at the lows or vice versa. If you bought the lows at 19s up to 06s, that's almost $1,000 for every contract. You need $2,000 to trade that, and you can make $1,000 from it. Not by risking $2,000. You just need $2,000 margin in your account. Yeah, that's a big deal. That's a 50% return on a small account. That's a pretty big deal. Now that you know about last night's trade, we provided you with all the charts here this evening for tomorrow's price action on crude. Let's take a look. Starting first with the VIP chart. Now the VIP here on crude, again, there's that darn big round number again, just laughing at us right now. That big round number is definitely causing all the problems right now. Inside day, neutral. Closing print near the lows, that's bearish. Volume everywhere. We had volume at the highs, volume in the middle, volume at the lows. There's really no way for me to tell you where the most volume came today. The point of control is right about 99.40. Right? There's your POC right there where the most amount of volume went. But you can see I got volume bumps in the middle, highs and lows. So no real clue there on volume. 2 days sideways. The range was typical. Again, we typically see about 120 to 150 ticks of range. That's what we got here for your typical range here today. I'm looking bearish here with an opening print below 98.80 tomorrow morning at 9 o'clock. Bullish with an opening print above 125 tomorrow. Remember this VIP chart, we're talking about open at 9 a.m. This is not the electronic session we're talking about. We're talking about 9 a.m. open till 2:30 p.m. close in the pit on crude. Moving forward here, Now here is an 89 anchor. So for all my students out there, it's a simple fib number. It's a long-term chart. Just pick a number, find a slow time frame, zoom all the way out, and you can see I've got higher lows. I've got lower highs. Notice we've given you guys some great reversal zones here at the highs and the lows. Remember, we want to buy lows and sell highs. Members, you know what I'm thinking when I see a consolidated range like this, don't we? Think about what we train you guys in our trade room. When I see a price wedge like this, you should be thinking in certain terms. You know what it is. If you don't, remind me tomorrow morning. We'll talk about it. Again, you can see that big round number of 100 sitting here, and we're pretty much right inside of this range right now. I'm not surprised now that you look at a long-term anchor chart like this. I'm not surprised it's been so sloppy. I want to get the best opportunities buying those lows, so buying those 93s. And of course, we can't forget about selling the highs. So right now, no wonder we're going sideways here on crude. We're right in the middle of a consolidated range in the long term. Move a little bit faster now, and oof, this is new. Not getting much better here. Not getting much better. Here's the 48. Here's the 48 anchor. Okay, so we have the 48s here now, and of course on the 48s, you're going to see here that we have the resistance. Okay, lots of resistance here overhead. You can see how sloppy and choppy it's been right around that 100 level. Now we have a target here to the downside for short sellers, 97, 94.72, 93.53. So really the only option right now is selling short. But check out the next chart. Yikes. Check out the next chart here. On the next chart, as you're going to see, one second here. On the next chart here, you'll see here's my fastest anchor, And there's that sideways range again. There's that consolidation, higher lows, lower highs. If you're a student of mine with me at School of Trade, that should be firing off bells and right. You should be thinking specific things right now when you see higher lows and lower highs. Wedge, right? Remember we talked about referral price wedge. What am I doing here? Well, we already sold the highs and bought the lows here yesterday and today. Let's keep it up, baby. Keep it up. I'm going to buy the 99.11s, take profit at 100. Up at the highs, sell the hundreds. Back down. Buy the lows, sell the highs. Buy the lows, sell the highs. I'll tell you right now, guys, crude oil has a very difficult job ahead of it in the next 24 hours. Maybe not 24 hours, but next 12 hours. We've got inventories tomorrow at 10:30. And with those inventories, you know everyone's going to be walking on eggshells. So don't be a hero right now on crude. Don't you fiddle with that middle. Stay away from the middle. Sell the highs and buy the lows. I'll try to buy that 98.56. I'm ready to go to buy the lows right now, sell the highs, so on and so forth. I won't think anything less of you, though, if you sit on hands here until tomorrow's news comes out. Remember, very important we stay patient here, right? Stay patient. So that does it for crude. Now, moving forward, on the gold last night. Gold last night, we gave you guys a short, nice and easy. 1317.6. I'm not making this stuff up, guys. Go back and check for yourself. You can't believe everything you see on the internet these days. Waiting for our target here, 1301 right now. So right now, short, long term on gold. I gave you guys the exact entry location last night. If you took my advice here, you're already in that trade short from 17s, and we'll see how this thing plays out going into tomorrow's trading session. Moving forward here right now, gold gave us a very narrow range. Remember, we had a big wide range yesterday. That resulted in a narrow range today. We talked about that last night. Opened up inside, closed in the middle, volumes in the middle. Everything right now says gold is waiting on something. Looking for a bullish print above the 16.6 to be a buyer. Check out that big gap overhead, guys. A big unfilled gap. If we open tomorrow morning above the 16.6 or even better, above the 1320, we open tomorrow morning at 8:20 above 1320, we're going right to that 34.2. So be ready if we can get above that previous week low. Remember, that was the big thing from yesterday. That prior week low sitting right here. Very, very important stuff. Get me above that level, we shouldn't have any problem going to 1334.2, right? There's a big gap up, or actually it was a big gap down between Friday and Monday. Here, of course, now we'll try to fill that gap. And then look at below. I mean, gold has a huge move potentially coming here. If you look below here, the next support level isn't until you get to 1272. I mean, literally a huge drop down. So we get a big gap above us, right? These gaps, which they call a window in Japanese candlestick reading, is a window above us. And of course, as they say in Japanese candlestick kind of theory, windows should be closed. So they'll try to fill that gap to close the window. And then if we can get below 1306, if we open up below 1306, look out below, guys. We get a big wide open space down there until we hit 1272 on the VIP chart. Looking at the anchor chart here on gold. Again, very slow anchor chart. Members, put a year of data on this. 89 is a fib number, so I chose that. It could be 100, it could be 90, it could be 92. It doesn't matter what time frame this is. It's just a very slow time frame. You can see here, double bottom here. That low was from the last day of the year this year. Pretty cool. And we got this lower high. So right now, the highs are getting weaker, but the lows continue to stay the exact same way. Okay, we call this a bearish triangle, bearish pennant, bearish flag. I'd call it a triangle. Lower highs tell me those buyers are getting weaker. Now, we gave you this level earlier on last week or 2 weeks ago, and of course, that was a great selling opportunity. Here's the most important thing that I want you to see on this chart. We are below the key moving averages on our cloud. very important. Now that we're below that key moving average, we got 1,300 staring us right in the face, and it should be able to drop here. Remember we talked about that 1272? Yeah, well, there's 1287 right there. So 1287 is going to be another target for you short sellers tomorrow morning on gold. But again, the key here is that break and that push below that key moving average 1318. We just barely closed below it today. Now, this is the deal killer. This is the stick in the mud. This is when the record goes, yeah, not so fast, sellers. As you can see, we got quite a bit of support here waiting for us. So it's going to be a bit of a rocky ride down. And we just broke out of this bullish channel. So all signs are pointing to get ready for the break lower. What I would like to see, though, is I would like to see us get away from this area here. I'd like to see us jump up a little bit so I can sell it short. I just don't like selling directly into support. The only other option would be to wait for personality tomorrow morning after the opening bell. If you see the opening print below that low from today, you can feel free now to be selling here because clearly the blood is in the streets for the sellers. Last but not least here, our 12 anchor. You can see here on gold, we got this short-term bearish channel. We are below all the key moving averages like I talked about before. So right now, you have the green light to be selling here on gold. Like I said before, though, you got to be careful here. We saw that VIP chart right in the middle, so it looks like, it feels like, it smells like gold is waiting for something right now. We already got that short on gold already, so if you're in that short right now, hold on tight. It's very difficult for me to recommend you get in right now. What I would wait for is I'd wait for price to get below that 310, make it go lower. And then members, grab a wave pattern short down to that 1304.6, 1301.4 was the target we talked about yesterday. As you can see, we already got a great selling opportunity at the highs of that channel. Remember, channel highs are always going to be a very important spot for me to look for a short. So if you weren't able to grab the short at the top of that channel, now I got to be patient waiting for a lower low, and we'll go forward from there. Alrighty, that takes care of the gold here this evening. So gold, a little bit stuck in the mud, just like crude oil right now. And then what about the Russell? The Russell was the big winner here. Russell made us some great money today in the trade room. And again, last night on the newsletter, go back and check it for yourself, 193 ticks of profit, just short of $2,000 profit for every contract. Now, the margin on this is only $500. That means $500 gets you one contract. That one contract earns you 193 ticks, 1,930 USD. How about that for a return on $500? Yeah, almost like a lottery ticket. But a little bit better for us, right? A little bit better tax advantages than a lottery ticket, I'll tell you that much. We gave you guys a short here from 87s, target here down at 65.9. Again, don't take my word for it, guys. You can't trust everything you see on television these days. Go back and check it out from yesterday. That's the same chart from yesterday. Go back and look at it from yesterday as well, and you'll see that trade. No surprise here on Russell. Huge range yesterday resulted in a very narrow range today. Even though it was a narrow range, it still was a pretty typical range today. Neutral close, neutral volume, volume in the middle, close in the middle, typical range. This is pretty much exactly what we expected. We didn't expect to get a lot out of the Russell today. In fact, we got more than we thought we'd get because we had this huge range yesterday. Really, though, the key thing is, you'll notice we closed yesterday at about 75. We closed today at about 75. And each day, we're closing below the prior week low. So we're still seeing a bearish tone to this right now, although be it sideways. Now, very big deal here, guys. Open tomorrow morning above 87.9. You can pretty much guarantee 1,200 is going to be on your radar. If we open up below 65.8, we'll be looking to keep selling short here tomorrow. So look out here tomorrow, opening print above the highs from today or below the lows for today. Again, 1,200 big round number. You got to keep that in mind. If we break above, if we go below, let's find some targets down below here for you. There we go. Here is my long-term. This is the slowest of all my anchor charts. You can see my big, long, right, my big, long bull channel. I've got my 41.1. Now, the most important thing on this chart, though, is we have not made it below those key moving averages. Okay, look closely there, and we have not been able to push below those key moving averages. Very big deal there. So we're not out of the woods yet for those sellers. Buyers are still in control right now. Moving forward, though, here's the 48 anchor, and you can see here, yikes, sideways, sideways, sideways. Members, whenever we see higher lows, lower highs, what do? Sell the highs, buy the lows, and if we can break here below 57.8, I can sell the break using profit targets here below us. All right, guys? So sideways range in the short term on Russell. It doesn't look like we have much of a green light right now to get short, but again, below that 57.8, we can start looking for those selling opportunities. Final chart here tonight, higher lows, lower highs. Don't fiddle with that middle, guys. Buy the lows here at 65 to 68. Sell the highs here, 85 to 83. Stay away from the middles. Everything right now appears to be waiting on tomorrow. If you do get short here tonight on the Russell, great target there at 1155.4, depending on whether you're looking for a long-term target or a short-term target. Buy lows, sell highs. We're looking good here, guys, for tomorrow. That wraps it up. Now, I would love for you to come out and trade with me tomorrow in the trade room. I have a special invitation for you. Don't forget to register for our free trial or come out and join us as a brand new student here at the School of Trade. Now, remember, if you're watching this video on our YouTube page right now, make sure that you register for the free pass to our trade room and for our newsletter over here at sidewaysmarkets.com. I want to thank you guys so much for being a part of this newsletter here tonight. Don't forget to send me your feedback. Don't forget to share this valuable information with a friend. And guys, don't forget, come out and see me tomorrow afternoon or tomorrow morning in our trade room. I'd love to invite you out there as a guest. Signing off now, my name is Joseph James. Thanks so much for watching. Remember to learn it so you can earn it. Adios, amigos. Bye-bye for now.